Morning, Steve Free in Chicago with the morning grain comments. Well, behind me is a local fertilizer dealership, and we've seen this week corn prices rally because of the higher nitrogen prices. We had one central Illinois farmer yesterday paid $13.50 for nitrogen and anhydrous ammonia versus $8.80 2 weeks ago and $5.04 last year. That raises some talk that maybe U.S., the Brazil, and maybe European farmers may plant less corn next year because of these higher costs. We've seen overnight prices, beans a little bit higher, while corn unchanged, wheat's lower. For the month, beans are down, corn's up, and wheat's up. And I think in general, the market is trying to shift a little bit from supply to demand. U.S. weather is wet and might slow some of the harvest completion as far as corn and beans are concerned. Next week, we've got a November 9th USDA report, and I think that in general, market's looking for the bean yield to be a little bit higher, export demand a little bit lower, and they carry out closer to 400 million bushels. In the corn, they should raise ethanol demand, but the key will be yield. Some people think they'll raise the yield 1 to 2 bushels, which would probably keep the carryout at 1,500. Most people are trading carryout closer to 1 billion bushels with increased ethanol and export demand. In the wheat, they could also lower our export numbers, raise our carryout a little bit, although world trade to date through October is up 10% versus USDA's unchanged. We also see higher Europe prices, higher Russia prices in wheat, and we could see it after January 1, U.S. hard red winter wheat export prices competitive to other origins for export. Still, good weather in Argentina, and good weather in Brazil, and I think that markets will be watching pretty closely as to more demand numbers, which come out maybe weekly and monthly versus supply weather, which is a daily update in prices. 1250 seems to be a lot of resistance in the bean market. Corn market right now, December trading above the 560 area, into some areas that could cause some resistance and backing away in prices. And the wheat market trading Chicago above 760, KC 780, wheat in Minneapolis above 1030, oats for the first time above $7, board crush margins at 151. So in general, we're looking at a lower Canada crop, both canola, wheat, and oats, that's all causing all those markets to trade higher. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.